All right, welcome everybody. Thank you for coming. The cozy little blue room here. This is a panel about fintech innovation, just to make sure everybody's in the right place. My name is Dana Stalder. I'm a early stage venture capitalist at Matrix Partners. I'm based out here in California. We've got an amazing group of panelists from the category. Why don't I actually have each of you just do a quick introduction so folks know who everybody is here. You want to start, Ramneek?
Sure. Hi, good morning, everyone. My name is Ramneek Gupta. I co-lead the venture investing efforts at Citi Ventures, which is the strategic venture arm of Citigroup. We are chartered to help drive innovation at Citi, which we do by spending a lot of time with our businesses, understanding where they're headed, as well as spending a lot of time with the startup community. And when we find the intersection between the two, we help them connect with our businesses and have Citi adopt these capabilities, and startups get Citi as a big customer/partner. And in the process, we make equity investments in these companies too. So we're backers in a number of areas like IT, fintech, direct tech, digital media, etc., and happy to be here.
Good.
Hi, everyone. I'm Melissa Widner, and I am a general partner with NAB Ventures. I feel like here I have to explain what NAB is. People think I work for the National Association of Broadcasters, but NAB is the National Australia Bank. It's one of the 15 largest banks in the world. We're based out of Sydney. We started a fintech investing fund just a year ago, and we're investing in companies that can leverage NAB either as a customer, or we're the largest business bank in Australia, so they can leverage our distribution channel to grow. We just made our first US investment. It was announced this morning. I'm pretty excited about it. It's a company called Veeam that does FX for businesses, FX exchange for businesses. And we led that deal with Google and Kleiner and Silicon Valley Bank and SoftBank.
Great.
Hi everyone, my name is Oscar Niel. I'm the managing partner of the Rakuten Fintech Fund, which is the fintech investment arm of Rakuten. Rakuten is Japan's e-commerce giant, and you might be wondering why we invest in fintech. I think one of the lesser known factors is that actually 50% of our top line comes from financial services in Japan. And we've been active for about 3 years. About 70% of the portfolio is actually in the US, with names such as WePay, Bluevine, Insect, or Upstart, which we actually announced at Lendit yesterday. And the rest of it is in the UK and other parts of Asia.
Hi, I'm Brendan Carroll. I'm one of the founders of Victory Park Capital. We focus a lot in the financial services area. We've invested in over 35 different fintech or non-bank lending businesses around the world. I've been in business since about 2007 and have a combination of both US and non-US exposure, primarily in consumer and small business lending platforms.
Great. Why don't we start off big picture? If you look back across the last several decades, venture investing in particular in fintech is not a new thing. There's been some booms and busts, and we're clearly in an unprecedented level of investing now. But there have been a couple waves of this before. And as I look back, there's really not a lot of big winners have not really emerged in the grand scheme of things. And the big banks and financial service companies that dominated 20 years ago still rule today. I'm curious, what is your perspective? Is something different today, and what's going to emerge out of this big investment wave that we're amidst?
Maybe I can get it started. I think there is definitely a few things that are different this time around than it was several years back. Part of it, in my mind, is the ability to acquire customers online digitally. Right? This was not possible a few years back. Right? And it stems from customers. Customers are very comfortable doing this now. The customer acquisition costs are reasonable. They're sort of in the $100 to $200 range. And all of that makes it very possible for companies and upstarts to acquire customers and not to have a 200-year-old brand. So I think 5 years back, that was not possible. It's a lot more easier today, and that's making a huge difference to the ability of these startups to acquire customers and scale quickly. That's one of the key differences I see, in addition to obviously a lot of other things.
Any other thoughts?
Sure. I think obviously, as with everything, that there will be winners and losers. Perhaps this phase or this wave of investment is not necessarily that much different from prior ones, except that obviously we have a lot more network bandwidth, capacity, speed. Consumers are smarter, and also banks or the incumbents are clearly also very active in the space. One of the issues that perhaps would be a word of caution that we do see a lot in this space is, number one, companies that try to be everything. So that there are some consumer models where somebody starts with some form of a loan product or some form of a payment product, and before you know it, in the pitch they are already trying to sell you that they're going to become this sort of universal banking entity, and that doesn't work. So some of these companies are more products rather than companies, and that sort of raises a question about sustainability for a lot of these players.
I think it's a lot harder today to raise money than it was 2 years ago. I think you'll see more of these businesses go out of business in the next 2 years than you'll see new businesses be started. I mean, at this point, you kind of know, at least in the U.S., who the leaders are in their respective spaces. So those that are able to raise money now is a drastically smaller number than it even was 2 years ago. So I'm very happy when Upstart raises money, because I was a very early investor in that business. But a lot of businesses in this sector are not profitable, period.
Yeah.
And that cannot last.
And they won't be.
Exactly. And Lending Club and OnDeck's IPO did not necessarily go great for those investors unless you sold early. So I think there's a lot of unknowns in terms of how are these businesses going to continue to finance themselves. Will they be acquired, be it by choice or by necessity, or will you see a lot of them just slowly dwindle out because the venture community is not as aggressive as it was 2 years ago in writing checks to these businesses?
Yeah.
Well, I think that I agree the venture community is not as aggressive as it was 2 years ago, but I remember about 2 or 3 years ago thinking, because I started a company in the 90s and luckily sold it in the 90s, but became a venture capitalist in 99, so I went through the tech wreck. And it looked a lot like the tech wreck 2 or 3 years ago to me. It looked like the peak of it. And it keeps going, and funding now is easier to get than it was then. There's a lot more capital out there. And I think one of the things that's driving it is back then this was still very much an alternative asset class. And now everybody's investing in this asset class. So the amount of dollars going in is just growing and growing. And there's a limited number of companies to invest in, number of interesting companies to invest in. So it's still a good time to get funding.
Yeah. How about let me drill down a little bit on non-traditional lending in particular, because this has seen the lion's share of investment. It's also probably the greatest threat to incumbents because it's their big profit pool. What do you think the world looks like in 5 years or 10 years? Are there big non-traditional lenders that have taken real share from banks, or are these guys going to go by the wayside?
I think it depends how you define it. If 50% of American adults are sub 700 FICO score, banks do not lend to that population.
Yeah.
They haven't before, and they're not going to continue to do it in the future. They don't like the headline risk. They don't like lending above 35% APR. That is a massive portion of this country, and it will be non-bank lenders that have serviced it in the past that will continue to service it and continue it to grow. So if you look at Elevate or LendUp or a lot of other businesses that have been started in this space, they're not payday lenders. Yes, it's a higher price loan that no one in this room is going to want to take out, but to a subset of this country that is growing, it's the only opportunity set. So I don't see the banks playing there. On the prime side, depends on the securitization markets. While I agree there are more equity investors in this space, there is still a very large educational process going on in traditional fixed income buying of, do you want to buy whole loans from Prosper or Lending Club or Funding Circle and securitize those? There's not a long enough track record. There's not excess income spread if you see a spike in defaults. This has all occurred during a benign credit environment. So I think the banks, if they want to, can get in. But online lending, this room's full, but it represents less than 3% of all loans done online. Most banks just, for now, aren't as focused on wanting to build it out. So I think we'll have to see. And then this is a longer conversation, but it really just depends on the regulatory environment. Until there's clarity, the big banks, in my opinion, will not step in.
Well, I think the banks are starting to really question their credit models as they see companies come in and lending to companies and individuals that wouldn't qualify for bank loans. And so I don't know that they'll stay out of that space. I know we're looking really closely at that space and seeing that there's a lot of profit. But there's also a little bit of a feeling that, what banks do really well, and they have decades or centuries of experience at is credit scoring, right? And all these companies come to us and they say, look, we have this data algorithm. We know how to do this. We know how to look at the data, and therefore we can lend to these individuals and companies that you haven't been and make money. And they're doing it, and they're doing it well, but we haven't had a downturn yet. So we'll really know if their models work once a downturn happens.
Yeah. No,
but we're looking at this aggressively. I wouldn't say banks aren't getting into
Australia, where there's a federal rules and clarity, agreed. In the United States, there's 50 different sets of rules.
Yeah.
If you take money out of the ATM in New York, technically that's illegal because it's above the APR rate, but you can do it. And historically, no one's challenged it. Now Colorado, New York, and other states are starting to challenge national bank products that have APRs higher than their state caps. So until there's a lot of clarity in the United States, I meant the United States, not other countries. UK, Australia, it's great to do business there. You know what you can and can't do. Here you don't.
Yeah. Yeah. One thing I'll add to the discussion is, if you're competing on the lending side just on cost of capital, you're not going to compete with the banks. It's just not possible, right? So you have to find that edge. In my mind, that comes from two parts. One is either you're finding a source of information or data that helps you underwrite better than the honest data that the banks already have, right? So if you're sort of just taking the FICO score and slicing and dicing it 10 different ways, FICO is just one part of what the banks use. They use a lot of the history that they have with these customers, and that's impossible to get if you're not a bank, right? So you have to find some sources of information that are proprietary to you and are very predictive on the behavior of the customer in terms of payback. In the SMB side, we are starting to see that happen. Square Capital is a beautiful example. We were early investors in Square for that particular reason, because they, through payment processing, got wonderful information on these small, medium businesses by the minute, by the second, on how they're performing, and then they were using that to underwrite. That data is impossible to get outside of that ecosystem that they've built. It's very difficult to build, but they managed to build it. We have an investment in a company called FastPay that's building working capital finance solutions for digital media industry. And they've quietly, over the last 3 years, went and connected into every system of record for ad placement, and they've connected to all the App Store, etc. They understand how to underwrite an App Store ranking that a bank would not be able to do. They wouldn't know what to do with these kind of metrics, right? So you've got to find a differentiated data source that you can underwrite. That would lead to you building a good business. If you're just competing on cost of capital or ability to securitize down the line, etc., those are cycles. There are so many things that will take you out before you ever get big enough.
Yeah, I would just add to this that, obviously online lending is here to stay, and according to some metrics, about 10% of new originations actually in consumer came from new startups or already players that are establishing themselves. And we've mentioned the credit cycle, which obviously nobody has seen, but the other fact that's very, very important that will completely underpin the sustainability of these businesses is effectively the funding sources, right? We saw that already last year when we had the first tremors with Lending Club, Prosper, etc. I think the company that actually manages to ensure that they have some form of constant capital base will be the one that will stay, and that's an issue obviously because the big advantage that traditional players have is a depositor base, which obviously you cannot do as a startup unless you become a bank. And we'll see if things change with this administration.
Good. So lots of investments going into lots of areas. We talked about lending a little bit, but literally we're seeing it in every nook and cranny of fintech. I'm curious, where do you guys think are the areas that are ripest for innovation? What are the most interesting areas that are being developed right now?
Maybe I'll get started. One area that I think is very ripe but not as well focused on by the startup community, and I'd like that to change, is the RegTech space. I mean, we as banks spend billions of dollars on compliance and reg tech, lot of time, very manual processes, and using technology from the 80s really. Take anti-money laundering, billions of dollars spent. And it's a very low-hanging fruit when it comes to applying the next generation machine learning capabilities to this class of problems. But the challenge is the startup entrepreneurs have not even heard of anti-money laundering, right? For them, it's probably applied machine learning rather than anti-money laundering when you say, what's AML, right? So I think there's a huge opportunity there. There are lots of dollars. Banks are desperately looking for solutions. And I see very few companies in that space. And so I would like to bring that up as an area that would be phenomenal if more talent goes and builds solutions there.
I think a market that's really underserved from financial products or for financial products is small and medium businesses because they're expensive to sell to. And I think what we're seeing now is it's a lot easier to get to them. So we're interested in partnering with companies that have innovative solutions for small and medium businesses. NAB is the largest business bank in Australia. And one of the reasons we're interested in bringing great technology to our customers, but also it helps us get more data from our customers and helps us sell more targeted and tailored financial products. So things like HR solutions, if you can think of using an HR solution to have a branch, it can become a branch right in the small business. Or accounting packages, those are areas that are really interesting. So these aren't really revolutionary, right? It's just evolutionary, but I think we'll be able to serve our customers.
Right, it's funny how we all paused, right? Because when you talk about in innovation in fintech, well, is there any? Nobody has actually mentioned Bitcoin or blockchain, which even a year and a half ago everybody was raving about. I will add though that perhaps from the blockchain perspective, I mean to the extent that you think about distributed ledgers or effectively, well, the ability to process and store information in a more efficient way and in a way that you cannot corrupt is the key to making things more efficient or replacing legacy systems that will be, I guess, some form of innovation. But again, the question is how many of the companies in that space are actually sustainable, or are we talking about products or are we talking about companies? Right, so definitely some of these technologies will be useful for incumbents. What is questionable whether the startups and right now developing them will be sustainable businesses.
For us, I agree, it's small business. I mean, you haven't seen a new bank charter in the United States in over 3 years, and unless you're a believer that Main Street USA is going to have more retail branches opening up, there's nowhere for small businesses to go for a loan, and I mean sub-$100,000 loans. There's nowhere to get it. I like to jokingly say, with all due respect to the bank partners, big banks don't lend to anybody, and small banks really just don't lend at all. What Square does is great. We were their first partner in building out Square Capital, and I wish we had 100 different Squares. People that already service that small business in some way, shape, or form that want to get in and offer capital to what are very credit-worthy borrowers, but they're just small. It's not profitable for the banks. And the problem we've run into with other businesses that we'd like to focus on it is, again, still there's a lot of regulatory uncertainty, and it's very hard to find a big institution to make a commitment to build a business when there is that sort of uncertainty. So we're very bullish on companies like Square who can roll that out quickly because they already own the customer. And that's the name of the game. So that's where we're most bullish.
Yeah. So you talked about no new bank charters, kind of the change in the traditional bank, if you will. We're seeing lots of entrants pick off pieces of what banks traditionally do. And I imagine you guys are going to have a strong point of view on this, but what is the bank of the future? What are my children going to think of as their bank? Because it's probably not the way I think about Citibank or the local Wells Fargo branch.
Well, I think perhaps we should actually look at China. If you think about in innovation in fintech, it is by far one of the countries where you've seen the most innovation, and it's actually not even through traditional banks, but models such as WeChat, who have developed wallets which traditionally lose money everywhere, and in the West everybody has failed to make money out of it, and also payment systems on the back of e-commerce such as Alipay that have been tremendous, because again it's a kind of a closed market and it's huge. And it's growing very, very fast, right? So that would be an example of something that's driven with through a completely different medium.
To me, I think the who is very difficult to answer, meaning whether it'll be the Citibank or the NABs, or will it be the WeChats, or will it be some upstart, right? But the DNA of the bank of the future, I think we can sort of make some predictions on, right? So to me, it's sort of one of three things. On the front end side, you will have to adapt to the age of no UI, which means you're essentially never present and then omnipresent at the same time, right? So you have to find a way to present yourself and your services and products seamlessly in the context that the customer is in. So if it's Alexa, well, it's going to be Alexa, and you're going to have to do everything on Alexa. If it's Facebook Messenger, that's what it's going to be. If it's WeChat, that's what it's going to be. Second piece is products, right? It has to be, in many ways, there is so much information available, you cannot have this same process going where you call every time, and every time they have to understand who you are, what you are, and then they present the same 5 products to you, right? It has to be extremely specialized and personalized to you. And the last is the backend. All of this is not going to be possible if the backend doesn't change completely. And that in my mind will happen. Most of the manual processes like compliance, RegTech, et cetera, will get automated through AI, ML. That'll reduce the cost structures of doing these things, and people can put more of their dollars to R&D and product development. So I think all of these sort of things will have to happen for a bank of the future, whether it is Citi or NAB who does it, or WeChat who does it, or somebody who's new. That's up in the air.
NAB owns UBank, which is the largest digital branchless bank in Australia. So it's interesting to watch what's happening there and how that's evolving. And I think there's a future, and it's not too distant, where you don't need branches. So that's a big threat for banks, because when you take that away, what do you really have? But there's also such an opportunity with where things are going with financial products. And the opportunity is, today there's a switching cost, right, to changing banks. And that's why a lot of people don't. A lot of people don't switch just because of inertia. In the future, I think what we're going to have, in the near future, switching will be a lot easier. And in the further future, it's going to be a lot harder, because you'll be doing you'll be performing so many different functions through your financial institution, whether it's a bank or something else, that switching is going to be very difficult. So there's a great opportunity for banks to form a deeper relationship with their customers, provide them more products, especially on the business side. But there's also a big threat, because if they don't move fast enough, they'll lose those customers.
Great. I'm getting the wrap it up signal here. So, and lots of topics we didn't get to, but thank you for joining me up here. Appreciate your time.
Thank you.
Thanks.
Thank you.